Good morning, and welcome to episode 247 of Getting Rich. I'm your host, Rich Checkin, president of Asset Strategies International, and today is Wednesday, October 22nd, 2025. President Trump has confirmed that his would-be meeting with Vladimir Putin in Budapest to discuss ceasefire talks between Russia and Ukraine has been canceled. President Trump said it would be a waste of time to meet at this time. He is scheduled to depart Friday for Asia to meet with Xi Jinping of China to discuss trade and tariff issues between China and the U.S. Democrats would like to meet with President Trump before he departs for Asia. President Trump said he would be happy to do so as long as they opened the government first. Republicans and Democrats remain at a standstill. Republicans want to pass a clean continuing resolution. The Democrats want to get into a debate over health care as part of this process. Vice President Vance was in Gaza yesterday trying to stabilize the fragile peace between Israel and Hamas. And anybody who has any interest in precious metals knows that precious metals dipped significantly Friday, yesterday, and overnight. And my question to you, I'd love to hear your response, is this the end of gold bull's run? I think you know what my thoughts are. I'll cover them in a second. But let's first take a look at the numbers over the past week. Gold is down 4.3% from a week ago. It's trading at $4,019.30 an ounce. It was $4,200.90 last week. Silver's down 9% in the past week. It's trading at $47.88 an ounce. It was $52.60 last week. Platinum's down 7.5%, trading at $1,544 an ounce. It was $1,670 an ounce last week. And palladium's down 10.3%, trading at $1,421 an ounce. It was $1,584 an ounce last week. With gold falling less than silver, it's going to take more ounces of silver to buy that ounce of gold. So your gold-silver ratio is up this week to 83.95 after briefly touching below 80 at 79.87 last week. And the US dollar showing a little bit of strength, still below that magical $100 value on the index against major trading currencies. Today it stands at 99.08. It was 98.89 last week. So I have a number of questions from last week's video and over this past week that I want to touch on. The first one regards the sell-off. Basically, have a good friend and client said, for obvious reasons, I can't wait for episode 247. Did gold drop almost $250 by Tuesday close? And yeah, the fall off in gold and silver is significant. Gold dropped 5% in a day. Silver dropped 7% in a day. I believe that's the deepest one-day drop in gold since 2013. And it begs the question, is this the end? And the answer is absolutely not, folks. Fundamentals have not changed one iota. Gold and silver are still your go-to in this current environment. We saw a massive run, unabated upward for several weeks and a month or two actually, and it was time for it to pull back, take a breather, take a little profits, whatever the case might be, and we'll see a pause, and then we will see a resumption of this bull market. There is no question in my mind. We had one question about Perth. So, every time there's a run on metal, so over the past few weeks, people have moved into silver, indicating, as I've always said, that the investor is now finally getting back into this market when they start buying silver and gold. It's not just central banks, it's investors as well. So now investors are buying up fabricated coins and bars, and guess what? The mints can't keep up. This happens every time, folks. It doesn't mean that Perth Mint is out of silver. Nothing could be further from the truth. They are prioritizing what they are making. They are focusing on 1 ounce gold and silver coins because those are the most demanded, most widely requested coins, and kilo silver cast bars, because those are the most common bars requested. It's not that they're out of silver. That's not why they're not making other sizes and shapes and forms of gold and silver. They're only concentrating on what people tend to buy, and they're feeding that demand. And then the last question I had was a client wrote in and said, central banks and gold bugs don't sell their gold. The higher the price goes, the more they hang on. So just where are the Morgan Stanley's customers going to find their 20% in gold? And folks, the situation isn't that dire. Gold is very rare, but there's still plenty of it out there for investors. If Morgan Stanley clients want gold, there's plenty for them to get their hands on at this point in time. And as that starts to increase in demand and supply starts to seize up a bit, you'll see your prices rise. And those that are holding precious metals will be rewarded for doing so. And those that don't have it yet will pay a dearer price to get that gold. But there's still gold out there for them to get. I hope that answers your questions. As always, we'd like you to go ahead and follow us on the YouTube channel. Subscribe, like us, subscribe to our social media, our twice weekly Always Something Interesting alerts, and our once monthly information line newsletter. You can do all of that right below in the comments section of this video. But in the end, don't ever forget that getting rich starts with keeping what's yours.